I'm genuinely mortified. It's like I just witnessed an absolute bloodbath. Some of these stocks are getting hammered, or were hammered. Oh my gosh, it's a bloodbath out here. Needless to say, we're going to start here with a garbage dying company, Groupon. That's right. I'm sorry, Groupon. You're dying, and we can tell it because you're down 7% after hours. At one point, it was up, and then people caught their senses. It was down 11 at one point, nearly 12% down, and it's recovered to somewhere around 7% after hours down. Ugh, that's rough. To under a $3 stock now. Yikes, yikes, yikes. So Groupon missed by 2 cents on an EPS standpoint. Again, negative EPS. Don't like it. Don't really like it. Pretty well zero profit in this company still. Zero profit is a bad sight for me. And not only did they miss on revenue, but it was a decrease of 16% year over year. They were expected a decrease, but they missed off of that decrease as is. Down 16% year over year in revenue. That is ugly. Ugly. There's a good reason why that got hammered. Revenues dropped by double digits, missed on even the low street expectations. That's right. Company swung into net loss again, losing money, garbage. Don't mess with this. Don't mess with this company. I told you not to already, but just keep listening to me. You know, revenues and 16.4% decline, fell short of consensus. Low end estimates were 500 million. They didn't even hit that. Gross profit fell by 9% to 277 milo. Operating income tumbled to 4.6 million. Yikes! They made a total profit at the end. You know, we're accounting for all expenses here. $4 million. That's it. I mean, I'll take $4 million personally, but this is a company here, okay? $4 million, what are you, a mom and pop shop? Good grief. Make some money. Revenue breakdown, services down 7%, product down 25%. Again, Groupon they're a dying company. Unfortunately, that's just kind of how it is. Conference call is going to be the following day. It'll be after I had posted this already, so I think the stock will certainly react depending on how that conference call looks, what kind of guidance they give out. I don't know. We'll see. Obviously, that conference call could be the difference maker here. So if they do well on that conference call, it's really up to Rich Williams here to get investors back on board, but I would never get involved with a stock like this. $4 million in profit. Oh my gosh, that's what you're taking home, really? Nope, not messing with it. Next, we have Uber. Uber stock. That's right, already down 1% today in anticipation, and ended up down 6.4% for the whole day, down 5.5% after hours. And it's earnings. It's earnings related. I mean, this stock's been nothing but massacred since IPO. If we're looking since IPO date, which was earlier this year in May, I mean, it's done nothing but tank 25%. So, I mean, this is not a good investment right now, in my opinion. I think the valuation is getting a little bit better for me. I'm just still not a fan of the company's offers. Obviously, last year when they lost $3 billion, I don't like that personally. That's definitely a lot of money lost, and you see that continues here. So they did beat on an EPS standpoint, but still negative 68 cents per share. I mean, that's rough. That's a rough EPS number there. And obviously, the higher you boost that revenue with still that negative earnings per share, you're losing money like hand over fist, and that's what Uber is doing now. I'm certainly not going to deny the potential success of the ride-sharing business, and I talked about it in my last video with Lyft. ride sharing is going to be a huge thing. It's going to be a huge factor, but there's no value for the shareholders here if the company is going to have to raise capital in order to actually survive. I mean, if you're not making any money and there's no chance, there's no necessarily plans for making profit here, it's going to be rough. Obviously, that's a very good revenue beat. 32% year over year, but obviously they did missed expectations by a marginal amount. Nothing major, but I think a lot of it's going to be tied to that. Still, it's a rough EPS number. They did beat, but it's still a lot of money lost. This is a company that lost $3 billion last year, and I mean, what can you say? Uber revenue beats. Lyft shares down as a result. I mean, that shouldn't even be part of this news article. Down 0.1%. Who cares? Gross bookings were 16.47 below, which is below consensus. Uber Eats bookings grew, and Uber Eats loses them a lot of money. Just a fact of life. Ride-sharing bookings rose 3% quarter over quarter. Beat the consensus. So, and Uber Eats also was lower than consensus, as you can see. See there, lower than consensus, but they did beat. They did grow 8% at least, so that's interesting. Monthly active platform consumers grew 26%. That's good for them. Obviously, want regular users, new users onto the applications. And there's both Uber and Uber Eats. Uber raised its adjusted EBITDA. I love saying it, EBITDA. I'm just going to keep saying it. From 3.3 billion loss to 2.8 billion. Oh my gosh, it's still 3 billion loss. Oh, I hate it. Full year lost $3 billion. It's lower than consensus, but that's so much money lost. It scares me. I don't know. I can't buy Uber right now. I don't like how much money they lose. It scares me too much. And finally, which is an interesting one, Tandem Diabetes. And I've had this one on my stocks to watch list for a little bit, just for the fact that it has been booming. Talk about a hype stock. First off, the valuation is absurd on this company. It is absurd. I don't even know how it's possible that the valuation of this company exists the way it does. A lot of it's just hype off of a new product they were releasing. And as you see, look at this 5-year chart. So really all of this value, this was a penny stock. I mean, this is a penny stock and started 2018. Since then, up, 1,800% since the start of, it's even higher since the start, really. If you look at since the start, 2,500% up since the start of 2018. And that's entirely based off of hype. And since then, obviously, this is still going up, but obviously it just recently got hammered. Down 10% after hours. It was down more after hours prior, actually. It was at one point down like 12%, 13% after hours. Suey, that's rough. So what the heck's going on? You see your full year revenue last year of $183 million, and look at the value of this stock right here. Oh my gosh. So let's look at the quarter. EPS of negative 9 cents, so money loser, but they beat on an EPS standpoint, and they beat on a revenue standpoint, up 100% year over year. They 94 million only, so it's a very good quarter, right? It is a very good quarter for them, but they're down massively because look at this, $94 million in a quarter. If we're being generous to them and giving them the estimate of $400 million in a year, where is the $60 in share price in that? I mean, the EPS isn't there. I know that. They're not making money. Where's the value there? This is one of the most hyped stocks of all time that I've seen. Just the 1 year performance from 2018 to 2019 on this stock has been outrageous. And it was all 100% based off of hype of a new product they were releasing. So we can see all these numbers look good. Sales up 104%, net loss up 91%. Yikes. loss per share up 85%. Pump shipments up 112%. So that's the hype behind this company, is that that pump, that insulin pump that they had developed. So is the company garbage? I'm not saying it's garbage. I'm just saying that it's not worth what it's worth right now. I think it's just way too overhyped. That's frankly what I got for you in terms of this massacre. I just went on long. I talked too much. I'm sorry.